September 16th, market analysis, Stan Ehrlich. Good morning, 9 o'clock California time. A little under the weather today. Maybe it's a smoke in the air, but let's get the ball rolling. As you know, I've been expecting the support levels to be broken in the major indexes, and today, although I thought it could have been yesterday, came close, was the day today, but we gapped down. Please remember, I keep saying this, and we have had a lot of gaps in the last few weeks. Gaps are almost always closed. Gaps are kind of like a black hole in space. They tend to suck the price action back into the gap. So yesterday's low of 388.78 could be hit, maybe even today, I think in the next couple of days. Also could be a good price level to consider selling short or adding to shorts. I don't think the rally is going to carry much further, possibly around 390. There's a good resistance level there that tried to stop the market on the way down yesterday, and it kind of succeeded the day before. And as you can see, a couple of weeks ago, or a week or so ago, it did stop the break, but it's gone now. We don't have any real significant support, in my opinion, until we get down to around 380, which also could happen today without closing the gap. I said gaps are almost always closed, so you can usually expect it to happen. Sometimes they don't. I haven't got a good name for this. I don't think it's a breakaway gap. I don't think it's an exhaustion gap. If you don't know what the name is, then the common name is common gap. And they are also, like the others, typically closed. So we have this gap also in the DIA right there today. And there's a little tiny bit of gap left in the QQQs, which managed to rally an hour or two ago to close almost all the gap, but not the Russell 2000. It still left a big gap behind, and so far is bouncing off a little support of a couple of weeks ago. That support relative to the Russell 2000 is long gone. On the spider, and I'll bring the data into view here, and that was September 6th, that low. We broke it. We have now made new lows for 2 months. Not to be taken lightly. The next support levels, by the way, in the S&P are going to be around 380, but I don't think that's particularly profound. 370, if we get there, is going to be much more important. If 370, and I should say more accurately 372.5, 371 area, if that's broken on a closing basis, there is no real support left to speak of, and we will be making new lows soon. I think all of the indexes, I'll give it a couple of weeks, maybe 5 or 6, but relatively soon. And one of the major reasons I'm talking about that time frame is because of the October lows. I've showed this to you many times now in the last couple of weeks. Pardon me. The month of October has a very high historical likelihood of producing a buying opportunity. There's no particular best day, I can tell you. There's always an average. But I will certainly try to pinpoint it when it happens to the day. Hopefully, maybe a day or two in advance. But this coming October, I am expecting a low in the stock market indexes, of course the S&P 500, and that is a very important intermediate to longer term feature that's coming up. I'm crossing my fingers, etc. So I have a very strong expectation it's going to happen. It's going to be more perpetual bull market, Freudian slip, bear market for the next few weeks. And the last part of it during October, I think, is going to be a very sharp kind of a capitulation, exhaustion, maybe a few days of sharply down days, maybe containing some gaps as well. Let's talk about futures for a moment. I had talked about the buy signal I got in natural gas 5 days ago. Looks like a good buy signal. Have no problem with the way that it acted and where it is, etc. We did get a fill almost exactly on the low of the day the next day, and the next day was sharply higher. All well and good. Yesterday, market came down and even closed at the low of the previous day while making lower lows than the previous day. And there is downside follow through today. So our automated trading system, the Ehrlich reversal or ER signals, would have almost positively taken a profit on this trade, and we would be out sometime during yesterday probably. I want to point out we had an excellent sell signal. That's why it's red, smack dab on the top of the market, and that turned out to be a great trade. I've got a few sell signals here around the topping out process, and these signals do tend to cluster sometimes. I don't really have anything else in the commodity area at the moment that is particularly profound, so I will pass. Our live hog trade ended up getting out of it short a few days ago with a profit, and the 10-year notes, oh, here we go. We are still short from the rally high on August 2nd. That means a low point in rates when you have a high point in the notes. Notes go down, rates go up. We have a new low, but currently a slightly higher quote than yesterday in the 10-year notes. But the trend is obviously down since the beginning of August, so a month and a half. We got short smack dab at the top. So this trade is doing exceptionally well, about 6 points, 6 big points on the trade so far. Our trailing stop is the yellow line. It doesn't move with the market necessarily, and it doesn't move with nothing that you would expect. It's controlled by a variety of features. STS is what we call it, smart trailing stop, and it comes with the Ehrlich reversal code. That's about it for today. I hope I'll be feeling better on Monday. You guys have a great weekend. I have had a really great week. So, talk to you soon.